Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market analysis for Looksrare. We're going to talk about the significant break back above the 100-day simple moving average, some reclaims of some horizontal levels of support and resistance, as well as the weekly chart taking a look at the 9-week exponential moving average and the fact that this is the first time in Looksrare's entire history where it is closing above this on the weekly candle basis and it has the 9-week average starting to slope back upwards. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out as well. I am fairly active over there with crypto content. So I do want to start off here on the daily chart and again recap that we do have the break above the 100-day simple moving average, which is going to be the yellow line on this chart. And when I zoom out here all the way for Looksrare, the 100-day average formed back here in July when we first got that 100 days of price action following the launch. And ever since then, it has acted as resistance. We really haven't seen any sustainable moves or rallies above the 100-day average. It was resistance right here in August. We came right up to that level, rejected. We had a few moves coming up pretty close, not exactly testing it, but still acting as resistance. And then we also had this rejection right here in December. But over the last few days, we have seen that break back above the 100-day average. And in fact, if I zoom in here to over the last few days, we have flipped it right into resistance. So we've already retested it as support, which is a fairly bullish sign. And we're seeing this in confluence with reclaiming a lot of these daily ranges. So if I just remove all these drawings real quick, just to get a good look at the daily ranges, we basically have these two key levels, the one being this first leg down that we saw in June, right around 16 cents, and then the lows from back here in September, right around 19 cents. So Looksrare has reclaimed both of those on a multiple candle closing basis, with the 16-cent level really just reclaimed back here in the beginning of January, and then the 19-cent level reclaimed over the last few days. And with this, we've seen them act as strong support and resistance over the months, with the first again leg down right here in June acting as support. We flipped it into resistance right here in November on this rejection, up on this daily candle taking Looksrare up 30%. And then we had a failed breakout where we came up and rejected at the 19-cent level. So the fact that we've broken back above these and we're sustainably closing the daily chart above both of those levels is a fairly bullish sign on top of the break above the 100-day average. So ultimately, the chart is looking a lot more constructive. Back over here, it was pretty bearish because we discussed the threat of price discovery to the downside because we didn't have much support. We didn't really have any levels that we could look to. But the fact that Looksrare did not want to accept below the ranges, it did not want to accept in this region, and it had that solid reclaim, is sort of transitioning us into a more bullish state. So you have to change your view when you see those bullish patterns start to align. And again, we have seen that over the last few weeks with the reclaim of all of these resistance levels. On top of that, we do have the weekly chart looking fairly bullish with a first move above the 9-week exponential moving average. I like to use the 9 EMA for some of the more newer tokens because you don't need a lot of price action to really get a lot of history with this weekly moving average. And it's essentially been a level that we've seen rejections at time and time again, with the first retest back here in the summer, all of these weekly candles having the wicks up to the moving average, rejecting off of it. We rejected right here in September, and then more rejections throughout October. And then lastly, this move in December coming up to it once again. But we have seen the weekly chart come back above this level, breaking above it on a closing basis where we have 3 candles fully above this, which is fairly bullish because we're also seeing that slope back upwards. This is no longer going to be a region of downward sloping supply. We're no longer going to be seeing those sellers get more and more eager at these lower highs. And we've seen that really transition with the higher highs and the higher lows. So we're almost in this channel where if we continue on this path, we basically have the structure of higher lows and higher highs with that 9-week average working in our favor. So really just look to see if this pattern can continue. If we can continue to hold above the 9-week average, that is going to be a fairly bullish sign. And at this point, we do want to see reclaims of some of those lower highs, such as this one right here in October, right around 26 cents. And then if we can make a move all the way back up to the lower high in September, around 31 cents, that will really confirm that we're really in this new uptrend with the weekly structure looking a lot more positive. Now that all falls out the window, and that is invalidated if we are no longer closing above the 9-week average and this flips back into resistance. So on the scenario, if say Bitcoin has a big shakeout and it spooks those altcoins and we have a close back under this, that would sort of be the invalidation point where it's no longer as bullish on the weekly chart. And we would also see that correspond to losing these levels on the daily chart, coming back below the 100-day average, and then ultimately those ranges. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.